Hi everyone. I wanted to continue going over accounting, intermediate accounting here, and we are doing equity. We're continuing with equity, continuing with treasury stock transactions. Now, the key with treasury stock transactions is understanding what is it that we're actually doing. We are purchasing back our own stock, and I want to go over a problem today that helps you figure out what kind of journal entries are involved when you purchase and sell your own equity stock. So this is a question I'm going over with you here. Percy Corporation was organized on Jan 1. It had 1.2 million shares with a par value of 6. It had the following capital transactions throughout the year. Jan 5th, it issued 900,000 shares at 10 bucks. Then it purchased 120,000 shares at 11 bucks. And December 31, it sold 120,000 shares at 18. The question asks us, given these reissuance of treasury shares, what is the total amount of additional paid-in capital at December 31, 2012? So just to start off, when we issued the 900,000 shares, I just want to clarify that we received a certain amount of cash here, and that was 9 million, right? That was 900,000 times 10. So we received 9 million in cash. And where did the rest go? Well, we had 5.4 in par, because par goes every 6 bucks of every share goes to par, right? So 6 bucks every share goes to par, and 4 bucks of every share goes to additional paid in capital. So 4 times 900,000 gives us 3.6. So we start with 3.6 million in additional paid in capital here, right? And then we have these two transactions. We purchase stock at 11 bucks and then resell it at 18. So I just want to show you the journal entries on this. When we purchase, we debit treasury stock for how much? For 120 times 11. That's all it is. So it's 1.320,000 that we debit, and then we credit cash. And then when we sell 120,000 shares of this treasury stock, what happens is that we get cash. How much? 120 times 18, of course. So we get cash. So we get 2,160,000, right? And that's how much we're getting. And how much T stock do we get rid of? Well, we only had 1,320,000 in there, so we get rid of that much. We get rid of 1,320,000 because that's all we had, right? So the rest, as we talked in the other video, is going to be your additional paid in capital, treasury stock transaction account. And that's, sort of like a gain. And how much are you gaining here? Well, you got 2,160,000 cash, right? And you're getting here the difference because you're getting 7 bucks a share. So you're getting here 840 in additional, which is your additional paid in capital. So to sum up, the two pieces where you have additional paid in capital is here. This is your additional paid in capital, right? Keep in mind that's the amount that's above par. This is just goes to par. It's all equity, but it's just two different sub-accounts. One is called par, one is called additional paid in capital. The other piece of that is that sort of like gains on treasury stock transactions, which in this case, the 2.160 minus 1.320, right, equals 840. And the 840 is also additional paid in capital. So 3.6 plus the 8.4, you sum them up, that's your total additional paid in capital. And the correct answer here is D, 4,440,000.